Hello, hello, everybody. Jamie Trull here, your favorite CPA and financial literacy coach. And as you can see, I have a special guest. I'm going to try to go the right way. Oh, I did it the right way. I always go the way it is on my screen. I'm so proud of myself. I have a special guest here today. You can see Dustin Baker. I'm going to intro him in just a minute. But today we are going to be talking about something that you have asked for. So I polled my audience over in my Facebook group. If you're not a member, why are you not a member? Go to jamietrull.com/group and you can join the Financial Literacy for Women Business Owners Facebook group. But I polled the audience about what you all wanted to hear. And one of the things that came up was around loan funding and specifically around SBA loans. So understanding SBA loan programs outside of kind of the COVID era of SBA loan programs, which is actually what brought Dustin and I together, coincidentally enough. But Dustin is my expert on SBA loans. So I figured I'd reach out to him and get him to come on and chat with us all and kind of answer some of the questions that you all had. So I'll kind of throw it to you, Dustin, to intro yourself. But Dustin and I first met right in, the middle of 2020 when we were, I was trying to help people figure out if they qualified for PPP loans and get them connected. And that was in the middle of the total craziness, right, Dustin, where the first round of PPP loans that were so hard for people to be able to get. And so Dustin was helping a lot of people in my audience to procure that funding. And so that's kind of the first, our first relationship point. And we've stayed in contact, throughout this whole time, which has been great. So tell us a little bit about yourself, Dustin, and what you do and all the things.
Yeah, all the things. It was, I feel like so many of us were thrown in together kind of during COVID, and so many new things sort of began then. So it was fun to work together then. It's fun to keep working together. Thanks for inviting me to come on. So we run, my partner and I, an advisory firm, for lack of a better term, in the SBA lending industry. Have worked in the industry for nearly 25 years, worked for the trade group a long time ago, and have done other things in the industry since then. We do staffing, we do consulting, and because we've put so many people in different shops and help build national lending shops, one of the things that has sort of spun off of that is a debt placement business where we just know the people that are doing certain kinds of things in the industry. So as business owners that we know have come to us and said, who's doing a business acquisition, loan? How can I purchase this piece of commercial real estate using an SBA loan? Or can I do that? We've just moved more and more into the place of debt placement being a part of our business. So that's a little bit about what we do. But if it runs around in the SBA industry, we have something to do with it, I think is a short summary to that.
That's exactly why I knew who to call when, people were asking me about SBA loans. I said, well, okay, I have somebody for that. So thank you for coming on, Dustin. And I guess we'll kind of start off by just, what is an SBA loan? How does it maybe differ from other types of loans that business owners might be able to get?
Yeah, so SBA is an interesting program. It's really a gap financing program. So like from an economic development standpoint, the U.S. Small Business Administration saw a gap where people maybe can't get conventional financing, small businesses who are a little less catered to by the banks that are looking for bigger middle market clients, maybe where there's less perceived risk involved. And so it really started as a program to kind of fill that need for smaller borrowers, startup borrowers, people who are trying to expand their business, maybe don't have, just huge sums of cash in the bank. It's that old classic thing of you can get a loan if you don't need one, right? And so the SBA programs are kind of the government's attempt to fill that gap. And so what happens, and there's a couple of different core programs, but essentially the government is going to take on some of the risk, some of the downside risk that a banking institution or finance company might take to make a loan to a perceived riskier sector, which is small businesses. I mean, we all know that small businesses create more than half of the new jobs. They always kind of lead us out of recessions. And it's really important to the economy, but banks, because of the way they're regulated, just don't make as many loans to those businesses or on terms that are as advantageous to the business. And so through either a government guarantee or a structure where the government will make part of the loan, a bank takes less risk on. It allows them to make loans that really do spur economic development and addresses kind of that gap that exists in the financing stack for small businesses.
Yeah. So on the gap funding point, I love that because so many of my audience members, so many people that I really work with are the ones who are in that space, right? Where maybe they need some kind of startup funding. They are looking for something that they need to help them kind of get off the ground and get running, and that is really, really difficult when you can't show, right? Like you said about, the people who need loans or who can get loans are the ones who don't need them. Right? I think that people sometimes feel like, okay, how am I supposed to ever get started? How am I supposed to ever kind of get the ball rolling on some of these things? And so I think that's such an interesting point around who these are for, right? Is to kind of serve that group of people, whether it's startup or expansion, that maybe otherwise banks might be less inclined to loan to, but because the government is backing up a portion of this loan, they're more likely to take on some of that extra, perceived risk, right?
And one of the things I think that's interesting to kind of note is a lot of banks still use the SBA kind of just as a risk mitigant, but they're still really conservative in the way they deliver the product. So not all SBA lenders are created equal. And like there's a whole tranche of the industry that doesn't want anything to do with a startup loan, even though that was the government's intent in launching the program, 50 years ago. And so just kind of knowing how to navigate. And we end up talking to a lot of people who are starting a business up and they have a great story, they have a great plan, they have good experience, but there's one or two weaknesses in that deal. And you've got to go to the kind of lender that's looking to, there's looking for the mitigant to those risks and looking for a way to say yes to the deal. And really you're looking for folks that specialize in this and have people that just do this and it's not just an add-on to a local bank. And so most of the people that we speak to have already had 2 or 3 bad experiences with lenders that really don't want to make an SBA loan. And so then we'll shepherd them to introduce them to someone who kind of knows what they're doing, why they're doing it. And this is kind of the whole identity of that lending company. So anyway, I'll belabor that point a little bit, but a lot of people have had a bad experience because they really haven't gone. And I would say, like, if you go to get a mortgage, you're probably not going to your local bank. There are a few local banks that are good at it, but for the most part, it's a national, lending company that really, that's just all they do. You're going to get better service. You're going to get faster execution and someone who really is motivated to help put that deal together and find a way to say yes. Same deal with SBA. It's little banks you've never heard of. It's non-bank finance companies who really are motivated to do these. And so getting people to the right place is really more than half the battle.
Yeah. So not all lenders are created equal. And it's not even just about finding a lender that does SBA loans. You have to make sure it's the right kind of lender that is motivated to do the kind of SBA loan that you need, right? Which is easier said than done, probably, which I think actually we can jump to talking about how to know if it's the right lender. What questions should you ask to figure out, when you're trying to determine if this is a good match for you for your SBA loan? What are the questions to be asked?
Yeah, I think really it's kind of straightforward. The first one is like, how many SBA loans did your bank make last year or your finance company? There's a handful of non-banks that make these loans as well. And if the number is fewer than like 50, then I would be concerned that they probably don't have people, because there are an additional layer of government regulations on top of these deals. And if you don't have a company that does enough of this at scale to be able to know where the pitfalls are and how to navigate you around them, you don't have a partner you'll feel lobotomized at the end of the process if you're not working with somebody that does enough. So that's the first one. And then I think the next question is kind of, what's the strike zone for you in the SBA lending that you do? Do you like to do commercial real estate loans? Do you do leasehold, transactions to improve leasehold where you don't have that commercial real estate collateral? Can I buy a business with a loan from you? Like, what kinds of SBA loans are the easiest to get done there? And then you want to ask to kind of walk me through what the process from application through the funding of my loan is going to look like. And really what you're looking for there is, and most of your viewers, they own a business. And if you ask them a question about their business, they can begin to answer that just because they know their business, right? Yeah. They're not hemming and hawing. They're not looking for the next part of their answer. They can just tell you what they know about their business. And so that's kind of the flow that you're looking for in the conversation with a lender is, okay, you do enough loans that you probably have people that know what they're doing here. You do the kind of loan that I need. But now when they start to talk about what the process is going to feel like, I want them to be able to talk about that without a script, if that makes sense. And you feel that when you're getting people that are kind of making the answers up on the fly versus people that really know their business. And so those are the few things that I would really recommend if you're talking to a lender. Or it's the same kind of questions that you can ask an intermediary like us, or like another company like us who has relationships with a dozen or a couple dozen lenders that do different kinds of things. If you come to that person with a startup loan, well, who are your top few lenders that you take startup loans to? And what is your process like with them? There ought to be kind of a fluidity with the way they can respond to those things. And also, how many loans did you arrange last year? Can I speak to someone who you helped, who was in my, spot that can maybe talk to me about what the process was like for them? All of those are just regular reference questions. And I think people just fail to do the work because they're trying to get their deal done so much. They tend to trust the first person they come to. And I'd love to say that that's a great idea, but it's not always a great idea to trust that person without verifying.
Well, and it's so hard because you don't know what you don't know, right? When you're in there, it can be really difficult. And that's why it's really good to be prepared. And just even listening to this conversation can help prepare somebody to walk in. And, if this conversation can just help someone to be more prepared when they walk in the door talking to an SBA lender and know what to ask and who the right lender fit is, then that's a win for us. That's why we're here. So tell us a little bit then, Dustin, as someone who's kind of a matchmaker, right?
Right. In several ways.
Yeah. Who is a good fit for an SBA loan? Because you may have some people that come in who are looking for SBA loans, but perhaps they may not be a good fit for it. So how do you kind of determine what's the right type of business for an SBA loan?
Yeah. And I'll just kind of go from the top of saying the path of least resistance for an SBA loan versus people who may be looking for a different kind of facility to kind of finance their business needs. So if you're at a stage where you've just got an idea, you're probably not there yet unless you've got a big pile of money, just disposable income that you can afford to pay yourself for a few years until the idea comes to fruition. In which case you probably don't need the loan at that point. If you have kind of easiest is an existing business with existing cash flow that can repay the debt with a little bit of margin. And you know exactly what you're going to use those loan proceeds for. That's kind of your easiest pathway for a lender. So I own this business and we lease our space and we've expanded and we want to buy the space and quit paying rent and then do these different things with it that we can do if we own the space. And I can show you from a projection standpoint where we're going. And from a historical standpoint, I can show you recurring cash flow that I'm going to be able to repay that debt with. So that would be kind of one situation. A startup is another one. So we just helped a couple in Tennessee in your backyard who's opening a specialty running store. And so it was a couple and they both worked for Nike. He was a corporate executive at Nike for 19 years. So they have all the connectivity to be able to start this store and do some really kind of special, innovative things. But it's a brand new business, right? And so you've got to have a lender that's willing to take that experience into account. They had some money in a 401k they were able to roll over into a tax-free kind of down payment vehicle to do this loan. And then they needed money for inventory. They needed money for construction of that space. They needed money for working capital for the first 90 days while they're kind of getting payroll going and all these things and don't have a lot of revenue coming in. Mm-hmm. And so the nice thing about an SBA loan is you can use it for multiple different uses of proceeds. So I can use it for construction. I can buy inventory with it. I can get working capital with that. I can do a bunch of different things in the same loan with a blended term. And the other great thing about an SBA loan is that it amortizes fully. There's no bullet payment. There's no balloon payment. And it stretches your payments out farther. A conventional loan, they may have gotten a 5 or 7 year term. This is a 10-year term on that loan, which is going to mean their monthly payment is lower, especially during the beginning of that business cycle. It just helps them to keep more money in their pockets and in their business as they're kind of getting going. So those are a few things, and there's a number of, if it's a business purpose of an existing business or a startup business where there's a pathway to success and a proven experience, and SBA loans are a pretty good alternative for folks like that.
Yeah. And I want to add 2 clarifications, just because a lot of people watch my content on COVID, on all, the EIDL and things like that, right? So when we talk about an SBA loan in this context being able to be used for construction and things like that, right? That's because these are specifically within their terms that's allowable. The EIDL is a bit of a different animal, as we know, because it was an emergency loan and therefore had more specific, stringent requirements around it. So ultimately, you want to be able to get the loan that is to be used for the thing that you need. So if you're using it to expand, you can absolutely do that. There are loan types that are to help with things like that. And then the other thing that I wanted to say, kind of piggybacking on what you said, right, is that putting on my financial literacy coach hat, right, debt isn't always the answer. And when we can avoid it, I think that's great. We're going to have less risk. We're going to talk about pitfalls here in a minute, because I think that'll be a good kind of next step in this conversation. Because I am a person, I'm not totally averse to business debt and personal debt. I find very, very different. And I think that business debt, when it has a purpose, right, and when you have either a very specific plan for it, right, or you have a proven track record for it, that's when you're going to want to potentially leverage that. But you don't want to use it to kind of plug holes in your business, right, to be a Band-Aid for other problems within your business. So kind of my recommendation, and I think what they're looking for too, right, is if you're an existing business and you're looking to expand and you're looking to, you have good cash flow, right? You're not trying to fix cash flow problems necessarily. You have good cash flow. You just want to kind of scale upward. That's a good candidate. If you are a startup, but again, the startups are probably going to be ones that are more capital intensive in nature, right? So not typically like your home-based businesses for the most part. It's going to be brick and mortars, ones that have a fairly substantial investment involved in getting them up and running. Is that a good understanding?
Yeah, or a franchise, or it might be an acquisition of a business. You may have a corporate executive who is retiring and looking to be a business owner for the first time. They have great business experience, management experience, and you've got an owner who's going to stay on for 3 years while they hand the reins off. And you can use a loan for that person who has some wherewithal to come in and actually purchase a business. But those are a little more capital intensive. They're not huge loans necessarily. I mean, the loan we did in Nashville it's a $400,000 project, and the borrowers are putting about $100,000 of their own money into the deal. And so, but the nice thing with SBA too is the loan to value is much higher, which means your down payment is much lower. If you've got an existing business, you can borrow as much as 100% of the project cost with an SBA loan. And more typically, your loan to value is going to be between 75 and 90% of the project cost, which means I don't have to put as much of my own money into the deal, which means I've got more personal liquidity left over at the end of it to buffer myself against my downside. And so there's several things that the government guarantee just really allows a bank to offer to a small business customer that is just not going to be available in conventional credit markets.
Yep, absolutely. Absolutely. So let's talk then about the pitfalls, right? Because we always want to go in eyes wide open when we're talking about debt.
Yeah, I think you kind of mentioned it, and kind of my biggest concern is always, I don't want to get someone into a transaction that's going to hurt them financially. And so just the same way as, you don't want to go raise equity for an idea that you don't know what your pathway to paying that equity back, and you don't want to dilute yourself. You don't have to, and those sort of things. So with debt, it should never be hiding problems. It should always be creating solutions. So if you use that as a paradigm to start with, and if you're working with a good lender or good intermediary, they're not going to move you forward in the process just to get a deal closed. They're going to ask those kind of probing questions and push back on you. One resource that I didn't mention earlier is kind of small business development centers, SBDCs, which exist all over the country. There are, experienced executives who are giving back to the community by sitting down with people who either want to start a business or take their business somewhere new. And those are people who will push back. It's a not-for-profit. They're not there to just close your loan and make money. They're there to make sure that you're rock solid before you go into the application process. So if you're kind of not quite to that place of, I've got all my ducks in a row, all the finances are ready to go, and I need to build a business plan, that's a really great place to go as well. I'd say avoiding pitfalls is having as many good counselors in your corner as possible. And that ought to include your lender and or your intermediary who's not going to let you do something to hurt yourself. Some things to be aware of: you're going to have to personally guarantee that loan. And you're guaranteeing that loan and taking full recourse with the full faith and credit of the United States government. And if you default on that loan, then you're not going to be able to get any kind of other government financing, VA, FHA, student loans, any of those sort of things. So you need to kind of weigh the cost. You know, what do they say? You got to count the cost before you start building the tower to make sure you can get to the top with it. So that's something to be aware of. You're probably going to have to pledge whatever personal collateral you have to secure the loan. There are some government requirements because, again, Uncle Sam wants to make sure the taxpayer's getting paid back if you figure out that you can't repay this loan. And so if I have reasonable equity in my home, I'm going to have to pledge my home. And there's going to take, if I own my home, either a first mortgage or if you know, I've got a mortgage on it, a second mortgage against that. And that's a really big deal. There's only a couple of states that have homestead exemptions that don't allow an SBA lender to do that. And so just know that you're really committing yourself. And if you just kind of think maybe this will go well, you really need to have the confidence that you know your plan moving forward before you move into one of these loans.
Yeah, and I want to underscore that because I think that is so critical. I think there is a misunderstanding sometimes that, okay, well, if my business closes, then, you know, okay, maybe it's not going to have a great impact on my credit, but no. Yeah. You know, they can come after your personal assets as well. So you're personally,
and they will.
So then let's talk application process, right? So what typically when people are walking into an application process, they think they're a good candidate based on this. What should they have with them? We talked about cash flow, right? So again, probably different for existing business versus startup. We can talk about kind of those in separate buckets, but what would you recommend people bring with them?
And I will make a point here before I answer the question of saying, if someone walks into an institution and has this ready to go, they're going to receive a different level of service from the lender, from the bank, than if they walk in and they need to be given a huge needs list and it takes them 3 weeks to come back and cobble it all together. Being prepared goes a long way in building the kind of impression that's going to get you the service that, like, look, I'm worth your time. Not just now, but, you know, when we talk with that couple in Nashville, I'm thinking about their second, third, and fourth store because they were so organized and thoughtful in the way they were ready for the conversation when they got to us in the first place. So, so having said that, the kind of things that you need to go ahead and begin to gather if you're thinking about getting an SBA loan is 3 years of your personal tax returns with all schedules. If you have an existing business, you want 3 years of business tax returns and financial statements. So year-end profit and loss and balance sheet. And on the financial statements, you want an interim as well for wherever you are in the year. And you need to be able to talk about peaks and valleys. How right now, how did I recover from COVID? How do we come out of it? What do things look like moving forward? How have we mitigated future pandemic type risk in the business? Those are all important things to be able to talk about as you look through your balance sheet and your profit and loss. So 3 years of those. Yeah, go ahead.
I was going to jump in and just say, so just kind of going back to like what I teach, it's not just about, hey, here's my P&L and balance sheet. It's being able to talk intelligently about them and what happened and what the trends have been. And if something, you know, if there was a peak or a valley, being able to articulate what that is as they have questions about those things.
Well, and knowing your business's history well enough to anticipate those questions and to be bringing those things to their attention before you get the question is a big deal, right?
Yeah.
So understanding those documents and providing them both, I think, is critical. If you have other businesses, and some people will, this is a new business, it's a side venture, it's an expansion, what have you. If you own 15% or more in another business, the bank is going to need to see the tax returns and financial statements for 3 years for those businesses as well. And sometimes this gets pretty convoluted. There's 7 or 8 sets of tax returns. But the reason that is that a bank's going to look at the global picture. And if you've got a huge weight of debt in one of your businesses that's sucking the life out of you, that's important to your ability to repay this debt. And are we covering, one mistake with a new loan? Hopefully not, right? Or on the other hand, is there a real strength in one of those businesses throwing off so much cash flow that you don't need to pull any income out of the new business for some time? And so, so that's something that a bank is going to have to look at as well. If you have business debt, the bank's going to want to see a schedule of that debt. What's the term remaining on the loan? What are my monthly payments? What's the outstanding balance? They need to understand kind of what you owe to other people, because again, that's a part of the global cash flow picture that they're going to take a look at. What else? Oh, key to know, if you've got another SBA loan, probably many people that are watching this don't have another SBA loan, but if you do, there's a maximum amount of debt that you can have at any given time in SBA debt. It's $5 million. So the bank needs to know what your other debt looks like so that there aren't eligibility issues going on with that. If you're a startup, a business plan, projections, if you have those in hand, that's really ideal if you're coming to the bank at that point. And then just a typical overview of your business, a summary document, a website that tells the story. You need something that kind of you can tell them in a summary form. This is who we are. This is what we do. This is how we make money. This is where we're going. And those need to be well articulated. If you've got your personal credit report, that's great. To bring it to the table, it's really easy to get. If you don't have it, you can get them all 3 bureaus free once a year. So I would do that. And so that's, and the last thing I would say is a personal financial statement. You can download the SBA form for that document or any other document. Really, it's a statement of my net worth. These are my assets. These are my liabilities. And in a bank, really, they need to know how much money you're going to have after the loan is over and how much wherewithal you have to make it through a tight spot if you get to one. And that's going to help them evaluate the credit risk. Those are kind of a starting point for any financial transaction of substance that you're going to need to bring to the table. There will be things that are specific to the SBA. If you have a criminal background, disclose it in the first conversation. It's not a deal killer all the time, but if it is, you want to know that before you spend your time and their time. And you may have to bring in an additional owner, additional guarantor. There's ways to kind of work around challenging issues, but you need to make sure that those kind of things are on the table early. I would just say this, there are a lot of different ways to skin this cat. And so you want to find a partner that's going to be in your corner to ask those questions before you get to the place where it's meaningful kind of yes, no stuff, because you can spend a lot of time talking to the wrong people before you get to the right people in this process. And usually we get to folks at that place and they're a little frustrated by then, and so just understand there's generally a way to get a deal done if the deal is worth doing. So a lot of creative structures, but we could talk for the next 45 minutes about what some of those look like. But I would just say, get with somebody that you trust and let them kind of help you navigate the process if this is something that's new to you, because we don't have muscle memory around this stuff. Usually a business is going to do something like this maybe every 5 or 10 years, maybe once. And so you want to be working with people that do have that muscle memory that you can sort of live off of that, if that makes sense.
Absolutely. So that's a good transition to if people want to reach out to you, Dustin, and your company to potentially help them, match make them, if they're the right fit, how would they do that?
They can just reach out to us via our website, or they can send just an email to info@bakerandlewis.com. And we can pretty quickly work through whether we can help, whether we can connect someone to another resource that would be helpful for where they are in the stage of kind of pursuing this.
And then I also want to do a quick plug for the SBA Roadshow, which I know is your baby, Dustin.
Yeah.
And I was on season 1 of the SBA Roadshow. So
you were the inaugural episode. That's right. Yeah, we did our intro and then it was Jamie Trull, and it was so fun to do that.
Yep,
right there in that office where you're sitting.
in the office and do an interview with me face to face, which was really cool. And it was right, like, when things were starting to kind of a little bit get back to normal, but not fully. So that was a really fun thing to do. So if you want to check out the SBA Roadshow, tell us a little bit about it real quick first.
Sure. Yeah. So the Roadshow was just an idea that we had because we were tired of sitting at home with our children trying to work. And so I bought a truck and I started driving all over the country, stopping in cities along the path to talk to professionals in our industry, but also to business owners, and just asking the question, like, how have you navigated this adversity? And it's just wonderful to hear. And it's that stick-to-itiveness that we talked about earlier. There's just so many different ways people have forced their way into success through hardship. And I think one of the encouraging things is just to listen how other businesses have done it. And the Roadshow really is an opportunity for people to hear those stories from Nashville to Chicago to Salt Lake City and we just got to go all over the place in 2 seasons, and hopefully we'll do another season here soon. But that's been fun. And also we talk about the loan process there. So if people want to learn how other people have done this and what it meant for their businesses, that's a great place to go. And just SBARoadshow.com, or we're easy to find on YouTube as well. So yeah, we'd love it if people check that out as well. Thanks for the plug.
Yeah, of course. Of course. I remember getting into Dustin's truck and there's just all these GoPros on all the different mirrors. And I was like, I feel like I'm on Tab or something.
Yeah.
Am I going to win a prize? What is this?
or why did I agree to do this? Yeah.
Or that. Yes. That as well. Well, I'm used to cameras, so at least that helps.
Right.
Well, Dustin, thank you so much for coming on here. I know this is going to be so helpful
pleasure.
to so many people who are looking for this information in a really easy to digest way that is specifically for small business owners. So thank you for coming on. I'm going to give myself a quick plug as well, or at least a giveaway that I'm doing right now. If you're watching this in July, which is when this will go live, I am doing our first YouTube giveaway. So we're trying to get 25,000 subscribers on YouTube. We still have a ways to go. So come on, guys, press the subscribe button. But we're doing a giveaway. And so if you go to jamietrull.com/giveaway, you can see all the different ways to enter. The one and really the main thing that we ask you to do, you only need to do this if you don't want to do any of the other things, is to help out another small business owner and then tell us what you did. And by doing that, you're going to get 2 entries into the contest. You can get them by various different things as well, like subscribing to our YouTube channel or newsletter. Things like that, nothing that costs any money at all. So make sure to jump into the giveaway. We're giving away $1,000 on August 1st. So I'm really excited, but we need to get more people. We need to get more YouTubers who are joining into the giveaway, and it's going to be super fun. So join us back here. We'll be notifying the winners by email as well. So jamietrull.com/giveaway. And again, thanks so much for joining us, Dustin. We appreciate having you here, and I'm sure we'll have you back for something in the future. If anybody has additional questions that weren't answered here, make sure to post them down below, and maybe we'll do a follow-up video where we can jump into some of those, right?
Well, thanks for having me. It's always fun to talk shop.
Of course.
So thanks for having me on.
I appreciate it. Thanks. Bye.
Bye.